So I've put together a PowerPoint deck for the Shred program in hopes that I can share this with clients and they can use it for staff as sort of on-the-fly training. So I've been involved with Shred since the 1980s when I was with the CRA in the early days of the Shred program, just after it was introduced, in fact, by Michael Wilson. So Shred is multidisciplinary. It involves a determination of eligibility. Yes, it's contained in the Act and there's precedent and what have you, but it's about an evolving level of eligibility in a variety of different technical fields and technological fields. So one, we have issues of eligibility. We also have to account for the costs. And then two, there's the tax issues as well. So first, let's talk about eligibility. So I say here that it requires, determining eligibility requires an understanding of the company's technology stack. That might be a term that would be used in a software development company, but basically every company has their own technology level, and while Shred must be seen, there must be an element of confidence in terms of if you want to qualify. There is a notion that knowledge, technological knowledge, can be proprietary. So just because someone else knows something does not mean that you can no longer do eligible R&D in that field, because if they've protected their knowledge with patents or with trade secrets or any other kind of IP protection, there's really you have to reverse engineer or rework that technology using different technological understanding. So anyway, the first thing we need to understand is that Shred Shred eligibility is subjective. It usually is not undertaken on its own. It's undertaken to support product development or product improvement. Product development itself isn't eligible, and technological uncertainty, the part that's eligible, is hard to define. So quite often, development teams don't quite understand eligibility and may need coaching to identify eligible work. That doesn't mean that they're not the experts in their own technology and in the technology they're trying to develop, but they may not understand where eligibility begins and ends. In May of 2011, there was a court case, 2011 Tax Court of Canada 261, the Gentel decision. There was in that case, it was determined that there was a 5-step eligibility process for determining eligibility. We used to have a 3-legged stool. Now we have a 5-step process, but essentially it's the same idea. So here are the 5 steps. So let's just read the yellow first. Was there a technological risk or uncertainty? Did you formulate hypotheses? Did you follow the scientific method? Did it result in a technological advancement? Was a detailed record kept? So those are the 5 steps or questions that we have to answer. And the answer has to be yes. But we'll go for each of those 5 questions, we'll look at what that means. So first, a little context. So Shred happens in business to support product development. And the product development that is happening isn't itself eligible. However, there is typically no shred without product development because 95% of all shred claims are experimental development, and that means product development or process improvement of some sort. So in the context of product development, we have to consider what is hard to do. Either we know that at the outset, or we encounter that as we try to do it. So step one, let's go back a second. Was there technological risk or uncertainty? So in answering that question, we have to ask why standard practice won't get you where you need to go. If you're in the business of doing this, if you're engaged in a project that's trying to develop a new process or product, you probably already know what standard practice in your field is. You're the experts, you're the people investing in this, you know what the issues are, and you know the standard way to support that, to get you started in this product development process. So we need to start with a definition of what standard practice is. You know, often that can be just a Google search. What an average engineer or developer could achieve on his own or her own without much investigation. Can you buy a solution off the shelf? Is there a product that you can just buy and plug into what you're doing? So if yes, why are you doing shred? If no, then likely eligible. But if yes, it could be too hard or too expensive to develop your own, may only partially meet your needs, and it may be proprietary, and you're going to be locked out of some of the key components of it. So that's step one. Step one, was there technological risk or uncertainty? If there was, we couldn't get there using standard practice. Step two, did you formulate an hypothesis of how you were going to, considering how you would overcome that technological risk or uncertainty? So trying to find a solution that doesn't exist within standard practice, okay, we just defined, we know what standard practice is. Trying to find a solution that doesn't exist within standard practice is an hypothesis. If you're trying to find a solution that doesn't exist within standard practice, take and save some notes describing what you intend to do. There's your hypothesis. That's step two. Step three. Let's go back here and see what we say for step three. Did the procedure adopted accord with the total discipline of the scientific method? Reality is, this is a judge dealing with this, a lawyer. The scientific method is all well and good, but typically what we're dealing with is not scientists in most cases. It's engineers or software developers, and while they may conform to a scientific method in that they have an idea, they test it, they document the results, they conduct experiments, document results, keep their test data and results. That, in effect, is the scientific method. It's not the kind of formal scientific method that somebody in a white lab coat might use, but an engineer or software developer typically uses the same methodology. They just it's not so cleanly defined as a PhD in a lab coat might do. So then we have to determine the fourth step. Did the process actually result in a technological advancement? So what does that mean? Well, it doesn't necessarily mean what you might think. A technological advancement could mean that you had an hypothesis, you tested it, and it worked. Or you had an hypothesis, you tested it, and it didn't work. each of which is a result, each of which adds to knowledge. So success is not the same, advancement is not the same thing as success. Advancement is learning. So we have a requirement that you actually learn something from conducting the R&D. And then finally, the fifth step, did you keep a detailed record of activities and results? This typically doesn't and can't happen at the end of the process. But then the reality is, if you're doing eligible work, you have to document what you're doing. Otherwise, your technological uncertainty is probably trivial, and there's no eligibility. But regardless, without documentation, there is no SR&ED as far as the CRA is concerned. We've worked with companies over the years, and any of the companies that we've worked with that are conducting eligible R&D and doing that kind of work always maintain some sort of documentation. They couldn't do the work without doing that. Okay, so in the previous section, we discussed determining eligibility and the five-step process. The next part is cost accounting and documentation. So the CRA would have us believe that we should be using some sort of activity-based costing, specifically tracking technological advancement activities. The reality is no one does that. It doesn't actually make sense from a business perspective to track SR&ED projects. It makes sense to track business projects, product development work, experimental development. It does make sense to track that. The eligible part of the work, the SR&ED eligible part of the work, will be a subset of your experimental development activities. So again, companies document product development, not scientific research and experimental development. Typically, the eligible R&D isn't even defined until the end of the year. Your concern typically is to build, you've got a commercial concern to build a product that functions, that meets the specs that you've set out. In the course of doing that, you're going to be performing work that is eligible. But what we have to do is document the work, and you're probably already doing that with project management software, with some sort of a source code repository, with emails, some sort of a wiki. There will be even notebooks, but you will have some form of documentation as you move along the process. Otherwise, you shouldn't be investing any money in this development work. If you're not prepared to document what you're doing, this is not a good business practice. Now, CRA expects contemporaneous documentation, and they expect you, what that means, they want you to be documenting as you go along. Telling CRA after the fact what you did is a recipe for disaster. So typically, as we said earlier, companies do track activities, but just not SR&ED activities. And most often, the CPA is going to have to use the existing product development records and map these to the SR&ED projects. So we define the SR&ED project after the work is done, and then try to determine how the SR&ED projects relate to the larger experimental development projects. So we can, and typically we're going to use existing documentation like a source code repository, even commented source code, if nothing else. We have machine use logs, potentially emails, time and date stamped records for staff using equipment, for it really depends on the nature of the work that you're doing. But in most cases, there is documentation that's automatically developed as the work is done. If your company is receiving government assistance, for instance, under IRAP, Industrial Research Assistance Program, there's typically an initial contract which will detail what you're trying to do, and then monthly reports that detail what was done each month. There will be an element of reduction of the total benefit. However, we can use this IRAP documentation, for instance, to help with shred documentation, because the two quite often overlap to some extent. Okay, so we've talked about eligibility. We've talked about activity-based costing and cost accounting. We'll look briefly at some of the key areas of the Income Tax Act and how they relate to SR&ED as well. So in here we have a link to the Income Tax Act, so it's right there on the web. It's free, so you can look specifically at these sections if you need to. Here's some key sections. 12(1)(x) details government assistance. So SR&ED itself is government assistance. The timing of when the SR&ED incentives go into income is detailed to some extent here. Subsection 37(1) or section 37 details the amounts that may be deducted from your income. Note that experimental development is actually capital in nature, so we need this section of the Act in order to allow us to first deduct the expenses. There's a number of subsections that are of, this entire section is related to SR&ED, but some specific areas. 1.4 talks about salary or wages outside of Canada, so a certain amount of that is eligible. 37(9) deals with salary and wages and restrictions on salary and wages. 37(11) deals with filing requirements. 37(13) with non-arm's length contracts, so where two associated companies are working together on the R&D. Support work in one company may be claimed against SR&ED activities in another company. Normally you would require not only support work under paragraph D of 248(1)D, but you would also need actual SR&ED eligible activities under A, B, or C, 248(1), A, B, or C of the Act. 127(5) details the investment tax credit. We get a deduction from tax payable. 127(8) talks about the investment tax credit of a partnership. 127(9) has all the definitions: government assistance, investment tax credit, non-government assistance, qualified expenditures, SR&ED qualified expenditure pool, and then taxable supplier. Moving on from there, we have 127(10.1) additions to the investment tax credit for CCPCs. The expenditure limit, there's a $3 million expenditure limit for CCPCs. Associated Corps, in 127(10.3) defines Associated Corps. 127(11.3), what are non-arm's length costs and how to deal with those. You can transfer expenditures under 127(13), and then there's reductions of qualified expenditures for things like government assistance, non-government assistance, and contract payments under 127(18) to 20. Then in 248.1, there's that's the definition section. There's a definition of shred. And then under the regulations, there are Regulation 2902, directly attributable expenditures, 2903, directly attributable overheads, and 2904 to 7, prescribed proxy amounts. Government assistance, yes, it can complicate shred, but not all government reduces shred. BC IDMTC, for instance, does not reduce federal shred, but it eliminates all BC shred. IRAP can be claimed with shred. It doesn't reduce the proxy, but it is government assistance and reduces the claim as a whole. The film and video tax credits eliminate all shred. So if you're going to claim film and video tax credits, you can't claim shred at the same time. Contract payments can complicate things. Where is the taxpayer? Where is the payor resident? What are the terms of a contract? Where is the payee resident? Is the company selling a product or service? Where was the work done? How much of the work was done outside of Canada, outside of the province? Does the company have a PE here or in the other province? And then the proxy cap. So the proxy is significant. It represents 55% of the total wages, and it can be complicated, and it is not calculated using tax software. You have to understand how to go outside the tax software. Anyway, there we have it. Here's our contact information. Thanks very much.